Hey guys, Mike Cox from Mortgage Nerds here in Appleton, Wisconsin. I am here with...
Brian Hoffman.
Who you with?
Mortgage Nerds as well.
Appleton?
Appleton.
Okay, good.
All of the state.
All of Wisconsin. Good.
Yes.
So if you're in Wisconsin, please listen up. All right, today guys, we are talking about a pre-qualification versus a pre-approval. Lot of misconceptions on what that means. Definitely have some strong viewpoints on this, but we want to get into it and just kind of break it down for you. So,
Sure.
Brian, give us a few highlights on a pre-qual.
Well, pre-qual is basically somebody fills out an application.
Usually an online application.
Online application or over the phone.
Yep.
And then everything is based off of what the borrower tells the lender. Okay.
Right.
So it's, yep, this is how much I make per hour. This is my salary. This is how much I make in overtime. You know, things along those lines.
The reason I say online is because we're trained when it's a phone conversation to go dig deeper.
Sure.
So let's pretend you're online, you're filling out an application. It says, what do you make each year, right?
Yeah. What's your gross annual income?
Right, depending on the
Yep.
application, they'll be worded differently. And you type in 60,000 or whatever, because you just got a brand new job and you're making commission now, you're making
Right.
double what you made last year. So you're like, put $60,000 in there. That'll come in later. So put that in,
Yeah.
okay? And then, so it's the data.
The data is provided by the applicant.
Right, the consumer. Now, our tagline is mortgages are complex, let mortgage nerds give you the answers that you need. We fully, wholeheartedly believe that. There's so many moving parts that you guys are just unaware of.
Just the guidelines.
Yeah.
All the different guidelines for the loan programs, everything's different. Where the client doesn't know those guidelines.
And why would you?
Exactly.
Like-
yeah, and that's what our job is for.
Yeah, right. We are trained a certain way to analyze data that will help you qualify for a mortgage or disqualify you before you get too far down
Right.
the line.
Yep.
And let's talk about a few things about that. Really, a lot of it comes down to income. You wouldn't know, like when I just mentioned there, you just got a new job, you're commissioned, you're making 60 grand now versus $30,000 last year, commission income.
Right. Well, depending on your loan program, you may need 2 years, you may need 1 year. There's a lot of different variables.
Did you have a history?
Correct. Is there a history of it? Did you have it in the past? Are you in the same line of work? There's so many different variables for what type of financing you're
Right.
doing that determines if you can use that income or not.
Right, and sometimes that's what we do too is, again, let us give you the answers that you need. Because you switched jobs and because of your income, puts you in a certain bucket, you can only go this route and use
Right.
that income.
Yep.
But in some cases, you can't use it at all. So here, another example, be like if you're getting child support or maintenance and you're like, oh, I'm gonna buy a house, I only got a year left on it. you know?
Right.
And you're filling out the application, you plug it all in, you put $1,000 a month in maintenance or whatever that is. It spits out your pre-approval letter. Some lenders allow you to put the data in and spits out a pre-approval letter automatically. Lenders like, it rhymes with schmicken.
Yeah. And pocket.
Pocket mortgage. They suck. And they give you data that's unrealistic and not vetted. So that's
Right.
what we do. We
Yeah.
look at your data and go, oh wait, hold on. Your maintenance is ending in 12 months. You can't, that's not, you need 3 years of continued income. You wouldn't know that. It's not your fault that you're putting in that data. They're asking for it, but there's nobody analyzing it and going through that with you. So on a pre-qualification, it's all the data that is provided by the consumer into the system, and it's running through a AUS. You want to explain that real quick?
Sure, the automated underwriting system.
Right.
Basically,
LPDU.
that's where the guidelines that are needed to follow
Right.
basically are in those findings.
Right, so we have a system that we run all that data through, spits out approve eligible,
Yep.
right? But if you're just throwing all the data in there, that approval is worth nothing. It's where we come in for the pre-approval part of it.
The actual pre-approval.
The actual pre-approval. And we take all the information that you gave us and break it down and say, all right, so it looks like you've been at this job for how long? How do you get paid? Is that hourly? That's the
Right.
conversations that come out, right?
And then, at that point, it can go even further to where, like, with your type of income, we actually need to order a written verification of employment so your employer can break it down year over year over year for us, so we have an actual numbers that way. It's providing the pay stubs. It's providing W-2s from last year or 2 years worth. There's, we get the actual data for the pre-approval and actually pre-approve, not pre-qualify.
Absolutely. And if you're self-employed, by the way, like we are, we love being self-employed, but that presents a whole other set of challenges. You will never get a pre-qual from this office, not this company, ever. You will only get a pre-approval because self-employed people have way too many moving parts. We have to have all the documentation, last 2 years, income, Ks,
K1s,
yeah. We want it all to provide you the actual pre-approval. You'll never get a pre-qual being self-employed here.
Right.
We need it all.
Yeah, and because of the lending environment, we're in the COVID lending environment, being self-employed presents a lot of challenges right now, especially with the additional information that's needed. It's not like it was in 2020.
Right, but even when we weren't COVID crazy, we still did the same thing.
Correct.
Self-employed people, you're just in a different bucket, and you require more nerds, more nerdish stuff done on your file, and that's what you want. So the huge warning out there, guys. Quicken is the #1 mortgage company in the nation. And their reviews are not good. They are not a good company to work for or to get your mortgage through. I only say that because we see the fallout. We see the fallouts from the bad pre-approvals, the high closing costs, all that kind of stuff. So, but they're really, really good at marketing.
Their marketing is the best.
Right, because it's a brand name, right? It's Quicken, it's everywhere. But they have a huge budget for it. So don't fall for that kind of stuff. They have you can go on their website. And there's many like Quicken too, don't get me wrong.
Absolutely. And when you're making the biggest purchase of your life, you don't want to go onto something where you're typing your information in a computer and trusting that everything's going to be okay.
Right.
You need somebody, it needs to be an actual person analyzing your data and making sure everything's okay.
And even, I would go a little bit, not only a person, an advisor.
Absolutely.
So all of us are considered mortgage advisors. We structure and we guide you through the process. We put you in the right loan program based on all the parameters about your unique situation. We don't allow you to say, hey, I want a 30-year fixed and I want to put 5% down. Like, you can tell us that, but we'll analyze your data and say, this is the route you should go and here's why. That's truly what you want in a mortgage, because the mortgage is the best tool you have to build wealth.
Right.
But again, the warning, don't fall for the online stuff where, it's easy. You just go in there 30 seconds, you type in your information, you get your pre-qual letter. See it happen all the time, and people will do it. For whatever reason, guys, you need to get pre-qualified. Even if you're thinking about buying a house 3 months from now, get pre-qualified and pre-approved right now.
Absolutely.
Yep. But people, I found usually what motivates people is the house. They find a house, they fall in love with it. I need to get pre-approved. They'll go on Quicken's website, type in their information, get a pre-approval letter because it's immediate or whatever. And then it falls to the wayside and they didn't, they got a loan officer that was delivering pizza last week.
Right.
And it's true stuff too. But anyway, don't fall for that stuff. Get an advisor, get somebody in your local area that you potentially could run into at the grocery store. They will work the hardest for you because their reputation should mean everything to them.
Absolutely. Check out a local broker.
Mortgage broker. Go to findamortgagebroker.com or mortgagenerds.com, right?
Absolutely.
All right, cool. Hopefully, guys, this was valuable information. If you have any questions whatsoever, just go ahead and hit the comments down below or message us directly. Remember, mortgages are complex.
Let mortgage nerds give you the answers you need. All right.